Hi, my name is Eddie C. I'm the author of Trend Following Metrics. Please allow me to introduce to you my latest book release. In this book, we explore trend following metrics and its advantages so you may decide if it fits your investing style. Trend following is a trading style that tries to catch the longer trends in the market and ride them for as long as possible. Its advantages are in trend following, you catch trends from the very beginning. Your entries and exits don't need to be that exact. Trend following don't take away much of your time. You enjoy lower transactional costs relative to day trading. You detect and cut your losses early. I personally recommend the book Trend Following Metrics should you want to deepen your learning about trend following. And I encourage you to read this book. In launching the book Trend Following Metrics, I have a book promotion fair called Read to Improve from the 19th December till January 31st next year. Excuse me. Should you use the discount code TIF Thailand, India, Finland, TIF Thailand, India, Finland, you are entitled to buy any two books from my Trend is Friends books collection at only 45 ringgit. Grab this offer while it lasts. Thank you for listening to my commercial, and I hope to see you then. Thank you and bye bye. Good day. The date today is the 29th of December 2022. It's Thursday and the time now is 1:22 p.m. Welcome to Purchase Rationale. Purchase Rationale provides 15 reasons when considering a particular stock. Disclaimer first before I start. So, whatever I share here is purely for information and education. Should you take action or plan to buy, please first consult your financial planner or a licensed broker. Okay, the stock in focus today is uh, UG Technologies Berhad. UG Technologies Berhad, or commonly known as UG Tech. The stock code is 7100. Okay. Let's get on with the fundamental. All right. Uh, First, we calculate the intrinsic value of UG Tech as of the closing of 12:30 just now. All right, when the market closes at 12:30, UG Tech is doing 3 ringgit and 29 cent. All right, but the intrinsic value we will now calculate. For the intrinsic value, we will divide the enterprise value over here by the total common shares outstanding over here. So we take 135,000, 1.35 billion divided by total common share outstanding 455.26 million is a billion divided by a million, and we get the intrinsic value of Tech at 2 ringgit 97 cent. 2 ringgit 97 cent against the current market price of 3 ringgit 29 cent. So it looks like we need to pay a premium if we want to acquire uh, the stock price today. All right, the stock price today. So how much is that premium? Is 2 ringgit 97 minus 3 ringgit and 29 cent. So we are paying a premium of hold on. Okay, I will need to recalculate again. Okay, I clicked in wrongly, so be patient. So it is cancel 1,350,000 divided by 45526. Okay, 2 ringgit 97 cent minus. Oh, I see. Hold on. Give me a moment. 1,350,000 divided by 45526. Okay, 2 ringgit 97 cent minus 3 ringgit and 29 cent. 3.29. Okay, you pay a differential of premium. Premium, you pay premium differential of 32 cent, and in terms of percentage, 32 cent divided by 3 ringgit and 29. Okay, or in percentage from about 10%, slightly below 10%, 9.8%. All right. So the question is it worthwhile to pay Tech at 329 with a premium of about 10%? So to answer that question, we have to look at the usual, the operating earning yield. Okay, the operating earning yield. Wait on, the computer is again very slow. Okay, the operating earning yield is positive at 6.43%. So there is no problem for the current market, not the current market price, the operating margin of 52.92%, very high operating margin, to cover the premium of about 10%, and still with an excess operating earning yield of 6.43%. So even though we will be paying a premium, there is no issue because the current operating margin will be able to more than cover the premium. All right. The ROIC is 49.29%, also very high, and a PE of 12.9 or 13%. So if you use the magic formula to roughly calculate whether you are buying at a justifiable valuation, if you use 49 divided by 12, let's do that again. Uh, 14, 49.29 divided by 12.92. Okay, there's a 3.8%, not percent, 3.8 times Anything above one is actually what I call uh, neutral valuation. But since this is 3.8, actually you are still buying, with the actually growth and operating margin generated by UG Tech. The magic formula of about 4 times shows that even despite the fact that it's selling at 329, you are still buying value about four times what it's able to generate in terms of growth and in terms of future earnings. Okay, uh, and the price earning ratio forward will actually increase. So what it is indicate is that the current market price will actually forecasted uh, to get higher than 3.29 at the current 12.9 times is 329. So if you use the current uh, earning earning per share times 15.9, you will get the future price, right? The enterprise value 13.19. I expect it to be higher since this is purely a technology stock. Dividend is good, 6.37%. And it is good because it has a dividend payout ratio based on a trailing 12-month basis of 90 over percent. Hold on, it's refreshing. Of 90%, meaning for every ringgit of op, of earnings, net earnings from the operating side, from the business side, every ringgit they pay out 90 cents, more than 90 cents. All right. So they pay almost all of their earning to the shareholders. Very generous. Free cash flow of 112 million. Okay, so plenty of money for to generate, either to pay uh, the dividends or to invest in growth by increasing expenditure. All right, capex, capital expenditure. Okay, uh, good free cash flow margin of 57%, meaning for every dollar of sales, they do have the luxury of spending 57 cents. Okay, either for growth or also for bonus, not bonus, a dividend payment. Okay, uh, it has a negative net debt of 182 million, meaning this is a net cash company, right? Anyway, it does have a small bad debt or doubtful account of 400 minus 486K. All right. Oh no, it's actually minus 480, meaning it has recovered some doubtful accounts from the accounts receivable previously. Okay. Poitrowski F score, meaning the performance, delivery, and the productivity of generating profit, net profit. 7, excellent, very good. 7 is the expected number. The Z score or the bankruptcy score uh, is very, very, very strong. So 13.48 against 2.5. So this is a very stable, strong company. No chance of it going bankrupt in the next 2 years, at least. And the M score is also excellent, minus 3.03 against minus 2.5, which is the expected, meaning they keep the account in good order. All right. So you can see UG Tech is, all I can say is that it is investment grade company. All right, investment grade company. Okay, how about the sentiment wise? Let's take a look. Okay, actually these are the stock pick I did last evening, and the one that trigger is actually UG Tech number two. Lee SK also triggered, but the chart is not so nice yet. So we are waiting for retracement, first lower low to occur, so I can tabulate the Ilio wave. Without that, I can only guess. So UG Tech is the pick of today. Pick of today. Okay. So from the chart, you can see that UG Tech is definitely in a trend. Okay, you can see actually quite a lot of higher lows here. One, two, three, four, five. Okay, higher lows. But if we use the current new method of establishing trend, is that you can see actually uh, a, a golden crossover over here, where the MA22 and the MA55 crosses over, golden cross over the MA233 line, which is used as the line to indicate whether the market is bullish or bearish. In this case, the golden cross indicates that it is bullish. All right. So definitely confirmation of a trend. All right. And momentum wise, if you look at the ROIC, since March of this year, the at this point, uh, the UG Tech has been actually gaining momentum, right, with the price action of the candlesticks uh, going upward. Most of the time, mainly above the MA21 line. Okay. All right. It, however, do take a note that actually UG Tech has is already riding on the fifth wave. That is the final impulse wave. So it is on the last leg of achieving its target price. Okay. Okay, before I talk about the target price at Apex Ilio Wave 5, what the strategy to do an entry today is purely based on a squeeze breakout over here. Okay, this line. All right. So it is a squeeze breakout entry strategy, and based on buying the price of 3 ringgit and 29 cent. Okay, uh, with a target price at Apex Ilio Wave 5 at 3 ringgit and 55 cent. All right, and a stop loss at 3 ringgit and 18 cent. All right, that you will have a reward to risk ratio of 2.5 times. That's good, isn't it? Excellent. All right. Okay, and volume wise, uh, there is I will not say that this is what I call a buyer's intact market yet, due to the fact that volume has been up and down roughly, but it is enough to generate some momentum upwards, despite the fact that it is still waiting. Should you have a condition or situation where the price and volume situation has breakout, then it will be very likely that UG Tech will achieve 3 ringgit and 55 cent in no time. Okay. Uh, well, that's all for today. If you think my trading idea today on Tech is informational and educational, please like, share, and subscribe. It will help the channel to grow and also allow others who are interested in investing in KLCI, our local stock market and boss, uh, to watch and learn from this video as well. All right. So thank you for listening and your time. Have a good day and bye bye. And it is 2 days to the new year. Have a good week ahead. Thank you.